Commodity currencies are feeling the heat in the thin month-end trade, but will central bank interaction be enough to keep the Aussie, Kiwi and CAD in check? I'm joined down the line by Colin Cieszynski to discuss. Colin, Commodity Bloc currencies fell heavily against the greenback after investors seemed to latch on to US data showing an improving jobs market and more cheerful consumers. Next week we have the NFP results, which will no doubt fuel taper talk. Is today's Thanksgiving holiday the calm before the storm?
It's certainly possible, and we've already had quite a storm over the last week or so for the Australian and New Zealand dollars, and even the Canadian dollar to a certain extent. It looks like we're pausing here for the moment, but certainly we could see the action pick up again when next week. I mean, we have the U.S. employment data, we have purchasing managers, we have a ton of releases coming out from around the world, and people are going to start looking ahead to the next Fed meeting as well. So this is a bit of a rest period here, certainly within a very active period for resource dollars.
The RBNZ imposed restrictions on high loan-to-value ratio lending last month in a bid to cool off the property market without having to resort to an interest rate hike, which could stoke demand for what it sees as an overvalued Kiwi dollar. The amount of loans exceeding the threshold has dropped, showing that the policy seems to be working. Will this have taken pressure off the Reserve Bank to raise interest rates, do you think?
It's definitely possible, and if we look back to the experience in Canada, it's definitely something to consider. Back in over the last 2 years, when Governor Carney was still here, he worked quite closely with the Ministry of Finance to tighten up lending rules in Canada to head off a housing bubble as they had seen collapse in the neighboring United States. Governor Carney today in the United Kingdom has started to take similar actions to try and cool the housing market there as well, again, without having to resort to interest rate increases, which hurt the broader economy. So it is possible that that if the RBNZ takes similar action, that may enable them to delay raising interest rates as they had talked about doing in early 2014.
Tomorrow we'll see the release of Canadian GDP for the month and the third quarter. Since the global financial crisis, significant external imbalances have built up in the Canadian economy, leading analysts at Goldman Sachs to recommend shorting the CAD. But what is your outlook?
Canadian dollar has generally been weakening against the U.S. dollar from quite some time now. This is a function of the general rebound in the U.S. dollar index against a number of major currencies, particularly since May, when the talk of tapering really got started. For Canada, they do have the loonie does have a bit of a headwind from commodity prices. We've seen weakening in crude oil prices, particularly WTI, as well as metal prices, copper and gold and other commodities. And because of that, the Canadian dollar had benefited from rising commodity prices through the previous decade, and now it's being held back a bit by the decline in commodity prices. The one thing that does help the loonie, though, is that the Canadian economy has remained relatively strong in recent years, and so as we see the GDP data may give us a better idea of whether the Bank of Canada will be able to stay neutral or if they're going to have to ease as well to get the economy going.
The RBA's routine IMF payment caught out market players on high alert for intervention. Do you think the Reserve Bank may be losing patience amid the considered overvalued Aussie dollar?
It's certainly a possibility here. I think what happened was that when we saw the RBA comments come out last week, both the Australian and the Kiwi dollars had been rallying since May pretty much, and certainly since the summer. Both currencies had been declining. The RBNZ had already intervened in currency markets back in the spring, and after the fallout from that, the two currencies had been on the rebound. So the talk from the RBA certainly has worked to get them to resume their downtrends. I think as long as the two currencies continue to trend lower, the RBA would likely stay away from intervention, but if we did see another spike again, then they could step in.
Colin, thank you so much for your insights today. Well, viewers, that's all from me for the moment, but complementing this interview will be Darren McDermott's Commodities Corner programme, today focusing on gold, so don't miss that. Goodbye.